What's up traders, welcome to weekly trade setup video. In this video I'll be covering a weekly trade setup, a complete breakdown of hottest currency pair that we will be looking to trade with my students this week. The currency pair that we will be covering today is gold, GBPUSD, silver, AUDJPY, EURCHF and EURCAD that we will be looking to trade this week, because these currency pairs may provide a good trading opportunity. I'm sure if you're a trader, then you will find a lot of value in this video, and at the same time I will link my previous week analysis above. Before you watch this, you can watch this video to see how much accuracy it has in my previous week's analysis, so that before you start you have some confidence on my analysis. At the same time, I want to give a quick disclaimer is that this analysis is my own opinion about the market. At any point the trade analysis may go wrong and market may do completely different than what I have analyzed. So if you take this trade based on this analysis, then make sure you do your own analysis before making any decision. At the same time, manage your risk so that if any trade goes wrong, you don't lose a big money. With that said, let's begin. The first currency pair that I will be looking to analyze is GBPUSD. So this is a complete breakdown. So let's start with the monthly time frame. So on the monthly, GBPUSD has created this bearish candle. This is a strong bearish candle. But look at the first bigger picture, what's happening. See, this is a monthly resistance level. Now if you see this pattern, this complete bigger picture, this is a reversal pattern. How do you know? Because see, there is a head and shoulder pattern, though this shoulder has a difference, but this kind of pattern is a completely a reversal pattern. And also look at the top of this is a completely strong resistance. There is quite a few monthly candle back to back rejected from this zone, and after that what happened, it has created this lowest level possible here, and then the price started to move up, went to the same resistance, and there has been a same level of reaction. Look at this back to back 3 monthly candle rejected from this zone, and then now the price started to move down. Now at this point, what we have seen, the previous months has created this red candle. Now this candle is basically a significant candle. Why? Look at the top of the candle, it couldn't create any higher high. At the same time, look at this, it has created a wick at the bottom. That means this red candle is a healthy candle because it has a retracement at the bottom. So the next one, what happened, the price went to the approach to this monthly close and then rejected to the downside because there is a wick at the top. Though there is still 18 days to go, but it looks like that it has completed its upward journey and now ready to move down. So on the monthly we are bearish. Now going down to the weekly time frame to see what kind of price action we have. Now on the weekly we have a very juicy, tasty price action, because look at this candle here. This weekly candle is a perfect hanging man. This is a very important level of resistance. Look at this, how many candle back to back rejected. There is a 2 candle closed here, acted as a resistance. There is a strong liquidity zone here, and now what we see, the price just been rejected from this zone primarily. Now look at the top of this candle, it couldn't create any new higher high after this move, and at the same time it has created at a lower high than the previous week. So now what is likely to happen early this week? The price a little bit traveling to the up, going to the at the level of the weekly close, and from here we can expect a drop to the downside. So on the weekly we are bearish as well. Now going down to the daily time frame to see what's happening. Now daily there is a double top formation and textbook pin bar. So this is a perfect price action for shorting opportunity. Now early this week at the opening it may not go straight away, or may go straight away, or may little bit of retrace to the upside, and then it may start to move down. So how we'll be trading this instrument? Going down to the further lower time frame on the 4 hour. So what we are seeing that this instrument is likely to create a head and shoulder pattern. So if you see the clear picture on the 4 hour time frame, this is the incomplete head and shoulder. So what we might see early next week, the price to travel a little bit to the upside to this level. This is the monthly and weekly level that I have already mentioned, and create a head and shoulder pattern and moving to the downside with a huge momentum. So how we'll be trading? We will be waiting to come price to this level to create this head and shoulder pattern. At that point we'll go for a short with a very good risk to reward ratio with my students. If you find value in this analysis, then first smash the like button and don't forget to subscribe. There is a lot of content in this channel that will change the way you trade. Now let's jump onto the next pair that we will be analyzing. The next pair that we will be looking is EURCHF. So EURCHF, let's see the bigger picture first on the monthly time frame. So on the monthly, what we are seeing the EURCHF basically after this big move to the downside, it has gone for a retracement. Let's see for this move how much retracement it has made. Take your Fibonacci from the high to the low. What we have seen that the EURCHF just been rejected from the 61.8 Fibonacci level. So this is an important level, the golden ratio of Fibonacci. Now after this move, what we can expect on the monthly is to move again to the downside, because look at this selling candle. This red candle is a strong bearish candle, and after that what we are seeing that the buyers are a bit weaker in compared to the seller. So this, because look at the one candle how much trouble it has made. Look at this two candle, still this is incomplete, but what we are seeing that the sellers are aggressive at the top of this candle, so it may not go further, rather it may create down or something like a pin bar types of candle. So on the weekly, on the monthly, on EURCHF we are seeing a downward momentum because it is established a downtrending market. Now going down to the weekly time frame, what we have seen that on the weekly also we have seen that previous week has created this pin bar at the top. And look at this, this is a established downtrending market with a strong trend line, and what we have seen, the price basically couldn't break this trend line. In fact, it has been rejected from the top and created this pin bar. So on the weekly, what is likely to happen is the price come to again a little bit of up, created testing this level, this weekly previous support here, turned resistance. It has already penetrated and rejected to the downside and closed back below. We might see a little bit of up, and from here we can see a drop to the downside. Now going down to the daily time frame to see. Now on the daily, if you see that this is a strong bearish candle the previous day, and then the last day of the trading week we see a weak buyers response. That is where you need to understand the sellers and buyers, who is winning the battle. So the seller candle is very, very strong, the buyer candle is weak. That means on the new trading week we might see a little bit of up, creating a lower high, or maybe a little bit higher high, and then from here we might see a drop, creating a head and shoulder pattern, and then dropping to the downside to continue its downtrend. Then how we will be trading? Going down to the further lower time frame. Now this is the zone where we will be looking to trade this instrument. We might see early next week the prices coming to this zone. At that point we will be putting in our watch list to see price action pattern to move to the downside. Let's jump on to the another currency pair that we will be looking to trade. So wait for gold analysis that I will do at the end of this video. Watch till the end. Let's go to see EURCAD, how we'll be trading on this one. So on the EURCAD, what's happening is on the monthly, first let's go to the monthly time frame to see the bigger picture. On the monthly, after this big move to the downside, what we are seeing the EURCAD slowly retracing to the upside. Now at this point, what we have seen, the previous 3 months back to back created this bullish candle, but there is something you have to look at. This bullish candle, look at this first bearish candle. This is a strong bearish candle, right? Now whenever the price is trying to go up, the sellers coming on a place. See, look at the top of this candle. Every candle has a long wick at the top. That means that buyers, sellers are very strong in this market. Now at the same time, here what we see, back to back 3 monthly candle rejected from here and created a strong level. Let's draw a level on this one. Now this is a very strong level of support here. 3 back to back candle rejected, and after that created this move. Later what happened, this red candle basically broke this level of support. Now it is testing as a resistance. Now at the same time, what we are seeing that after this month's candle came to this resistance, there is a support here, tested as resistance, rejected to the downside, and after that what happened, the price again came to this level, created a high, and then rejected to the downside. Now this month what we have seen, that the price came to the same level, and at the same time we are seeing the rejection to the downside. Now what you can see, that this month still there is still remaining, but what we are seeing that it couldn't create any new higher high. So what we might see from here, a new move to the downside. So on the monthly we have bearish momentum going down to the weekly time frame. What we see on the weekly as well, the price has created a head and shoulder pattern and it couldn't create a new higher high. Even it couldn't cross the previous 2 weeks close. This is also a level that it couldn't break. So what we might see in the new week, a little bit of retracement and then moving to the downside to create at least to this level to grab liquidity. Now let's go down to the daily time frame to see what kind of price action we have. Now on the daily, what we see that on the last day of the week, the price came here and then aggressively went to the upside. So what, as a continuation to the upward momentum on the daily, what we might see the new week, the price is moving to this level to complete to touch this trend line, and from here we might see a drop to the downside, or maybe creating a little bit of high to complete a head and shoulder pattern and then moving to the downside. So on the then how we will be approaching. Now this instrument, we have to remember that this is in an uptrending market. Remember, trading against the trend is very carefully you need to do when you see a complete reversal pattern. So what we have seen, that this is an established uptrend on the daily, so we will not trade it in a blindly or in a quick manner. We have to watch the price action carefully on the lower time frame to see what's happening. So if we see a clear reversal pattern in this zone, at that point only we will be considering this instrument to trade from here based on price action pattern on the 4-hour or on the daily time frame. When we will see a clear reversal or rejection from this zone, at that point we will go for short from this for this instrument with our student with a very good risk to reward ratio. Now let's jump on to the another currency pair that we will be looking to trade this week, which is AUDJPY. The AUDJPY, let's look at the bigger picture first on the monthly. So what we see on the monthly, look at this back to back 3 months. What happened is the sellers were in strong control. So that means On the monthly, it is in a downtrending market, though this is the overall picture in uptrend. But if you take this leg, this is a retracement of this uptrend, and we are seeing that on the monthly a bearish momentum at this point. Now after this monthly candle, this month, what we see, the price started to move up, but from this zone the sellers took control and push the price down. What we are seeing now currently, the price again moving down to continue this monthly downtrending market. At this point on the monthly, what we can expect, this price to come at least to this level or maybe lower or than this, to this 20 period moving average before moving to the upside or maybe going down further. So on the monthly we have a gap to fill. Now going down to the weekly time frame to see how we can trade. Now on the weekly as well, what we have seen that the previous week has created this bearish candle. Now because this is an established downtrending market, and what we see that the price even could not break this trend line. So if you draw this trend line, what we have seen, the price just been rejected from this trend line. Now at this point, what we can see in the new trading week, that the price retraced little bit and then dropping to this level at least. So there is the big gap, because this is a weekly time frame. If you go to the lower time frame, you have a lot to trade on this gap. Now going down to the daily time frame to see what kind of trading opportunity we have. Now on the daily also see, it has last day it has created this shooting star candle at the in a level of, it's not a strong support but in a level of support. So what we, because there is a dynamic support, 20 period moving average can act as a support. So on the new trading week, what we might see initially, the price to move up, touch this trend line on the lower time frame and then falling to the downside. So how we will be trading? Basically we will not trade definitely from here, because we don't want to, again moving to the upside. So on the lower time frame, on the 4 hour, what we will be doing is to wait for a move to the upside to this level, to this 20 period moving average, or maybe upper than this. And at that point, if we see the price has traveled to this zone, and we will be putting in our watch list to see the a price action pattern from here to take this move to the downside with a very good risk to reward ratio. The last thing now we will be covering is gold and silver, so stay tuned. Now on the gold, let's start with the monthly time frame first. So on the monthly, quite a few analysis I made on gold. So what gold did is basically the previous months created this, you can say hanging man or dragonfly doji, whatever you want to say, but this is a very, very important price action pattern. Look at this. After this green candle, the seller and buyer created this candle, which is a very, very important. Why? Because look at the top of this candle, previous month's candle, and this one here. What we see that it couldn't create any higher high. So when you see a candle like this couldn't create a higher high, okay, let me draw it properly, and then it has created a lower low than this green candle. So that's when you can see a next one to fill this gap, fill this wick, and that's what's happening. But at the same time, look at this month's candle. It basically troubled, break this level, created a false breakout to the upside, grab the liquidity, now falling to the downside. So what we might see on the new trading week to continuation of this move to the downside. So on the monthly, we are strongly bearish. Now going down to the weekly time frame to see. Now on the weekly, look at this. What happened is basically this is a strong bearish engulfer. So it is a level of resistance, and from this resistance we have seen on the gold a strong bearish engulfer. Now after this bearish engulfer, what we can expect? A little bit of retracement and then continuation to the downside for this move. Now going down to the daily time frame, look at this candle here on the daily. So on the daily as well, what we see, back to back 2 days created this trend line, and last day of the trading week it broke it up, grabbed liquidity, then started to move down. Now from here, if you see the bottom also, it has closed below. Now what might happen in the new trading week early, to go a little bit of up, touch this level, because this is 4 back-to-back daily candle closed in this zone. So this is a very, very important level, and what we might see, little bit of retest of this level, and from here we can see a drop to the downside. So let me draw it properly so that you can if you want to know it, you can review this video over and over again to understand what's happening. So from here, what we can see, a rise and then a drop from here to create to test this level, and then moving to the downside to continue its downtrend. Now if you see this picture on the lower time frame, on the 4 hour, what we can see that the price basically has created this pattern. So on the new week we might see a test of this level, or even maybe test of this 20 period moving average, and from here we can see a drop. So what we will be doing is basically we will be waiting price to travel a little bit up. At that point we will watch price action pattern on the lower time frame to go for short from here with a very good risk to reward ratio. Let's start silver, and then we will wrap up our analysis. Now normally silver follows gold, so there is not much to analyze on the silver because this is the same picture as gold. But let's see still what's happening. Now silver, see the same picture as gold on the monthly. What we see that basically after this monthly candle, look at this candle, previous months, a strong bearish candle with a wick at the bottom. So that wick basically retracement of this move, and now this month the price traveled a little bit and now started to move down. So we may see a drop to this level at least on the monthly. So on the monthly we see a bearish momentum. Now going down to the weekly time frame, on the weekly, the same as gold, it has created a strong bearish engulfer. So after this bearish engulfer we can expect a little bit of retracement and then move to the downside. So on the weekly as well we are bearish. Now further down to the daily time frame, on the daily what we see that the previous day has created this strong bearish candle from this zone, and at the same time if you see a little bit of clear picture, we see a reversal pattern here. Now how do you spot this reversal pattern? Look at this. This is basically a head and shoulder pattern. So this is the head, this green candle is one shoulder, this red candle is another shoulder. This is basically a head and shoulder, and we have seen a break of this neckline of this head and shoulder pattern. Then how we will be looking to trade? Now let's draw a strong level on this one. So this is the support acted in the past here. Quite a few candle acted as a support, created this move, broke this level. Now what we can expect, a test of this support as a resistance or this neckline of this head and shoulder, and then moving to the downside. Going to the lower time frame on the 4 hour, that's the picture we are seeing on the lower time frame. So on the 4 hour, what we will be doing basically to retrace a little bit up, test this level, created another price action pattern here, creating a hanging man or a pin bar, and that point we will go short from here to take this move to the downside. I'm sure you found value in this analysis, and make sure you manage your risk. Don't forget to subscribe. Thank you for watching. See you soon with another video.